I think the price level can sustain and that we're knocking on 4,000 an ounce and we're going to clear that level in the fourth quarter. I just don't think the volatility or the violence of this move higher is likely sustainable. So I do think there's a bit of FOMO that we often see in tech stocks emanating in gold right now. And I think eventually will calm in the fourth quarter, but that price levels will stay sticky at these elevated levels and continue to rally.
Tom, when Aakash walked in, I said, really, your title is gold strategy, head of gold strategy? And he said, yeah, man, we've got these ETFs. They were the first one with ETFs for gold.
Are they growing every day?
Crazy.
We have seen inflows this year of over 21 billion, and that is the strongest in dollar notional terms and volume terms kind of collectively since 2020, the pandemic shock. And we are looking to hopefully surpass that this year, given the structural and macro tailwinds for the yellow metal.
Who's buying gold here, too? When you see these inflows, is it retail coming in and just buying gold here? Is it U.S. versus non-U.S.? What are you seeing?
We're seeing it in all verticals, retail, intermediary, but also the institutional side, so OCIOs and strategic asset allocations. Gold was really an under-owned asset throughout 2024 and even early 2025. Really only over the last 3 to 6 months have you seen those inflows start to really pick up and surge. And gold become more of a consensus trade. Keep in mind, in 2024, globally, we saw gold ETF outflows, despite gold rallying 27% last year.
Is there a microeconomics? You're at Columbia in price theory, what they call Chicago micro. If price goes up like this, does new supply come on? Does, are they up in Leadville, Colorado, mining, with the tin and all that?
So mine production will be a record this year for gold and likely expand further in 2026. Gold performs differently than other commodities. Typically, when you have a supply shock in oil or corn, supply is going down, and that's why prices are going up. In gold, the price discovery function is usually a shift out of the aggregate demand curve. So supply can be at a record level just as demand is growing at a faster pace. However, there are two components of gold supply. There's mine production, but there's also gold recycling or gold scrap.
That's what
you see in a lot of
metals.
So within that context, actually, gold scrap has been lagging on supply growth this year, despite record high prices across currencies. So what I would say in that regard is that a lot of consumers globally, including in India and China, are just holding on to gold and also hoarding gold. And that's buttressing this rally, even as mine production is growing.
Do you even think about, I know it's a commodity gold. Is there a valuation call there ever for gold? Or is it just because it's such a precious commodity, it is just supply and demand?
Sure, there is. I think I look at it two ways. One is from a macroeconomic sense. Gold is influenced by inflation, real interest rates, and most importantly, currencies. So the dollar slide that we've seen this year, the first half, certainly the weakest dollar move that we've seen since the 1970s, then it's no surprising that gold is rallying this year, the most since 1979. But also on that front, we look at physical S&Ds, physical supply-demand balances like you would for any commodity. And when demand growth is outpacing and outstripping supply growth, that requires a higher clearing price. One more point I would add is central banks are buying gold. This is the 16th year in a row post-global financial crisis. Okay. And that is a geostrategic economic buyer that is price inelastic.